size. Their houses just
Yep.
don't work for them anymore and they want to move into a condo. Like those people, it's not a matter of if it's the right condition, it's what's happening in their life that
Yeah.
that is encouraging them or relocation. I've helped a lot of people lately who've been moving here from BC or wanting to sell their homes to move back out to Ontario or, like for the savvy people who have the ability, now is a great time to be buying investment properties,
Oh, 100% it is. 100% it is.
right?
Yeah.
Are you home now?
I'm stuck behind a bus that's driving really, really slow. I will be there soon. It is within eyesight.
I'm the only one drinking then. This isn't okay. I'm the only one drinking a glass of wine right now.
Oh, don't worry. I will have a glass of wine in hand as soon as I can get upstairs. Oh my gosh. Yeah, it's been interesting. Like one of the things that I was most worried about was how do we keep enough capital flowing? Like how do we stay liquid enough not to have to lay off our assistants?
Mhm.
And so far, like everything has been going really well. And then also the fact that the government's rolling out the wage subsidy program that will cover 75% of our wages is like a huge sigh of relief because the last thing I wanted to do was lay off my assistants and
Yeah.
be like, sorry, I have to pay myself first.
You know what, Dallas? I think we should actually introduce you. Can you maybe tell us who you are, what you do?
Is Dallas Sleeman, and I am a mortgage broker slash co-owner of On the Mark Mortgages.
Woo. We love you guys. You are some of our favorite mortgage brokers. And I will tell you that I use you because you're not only the most ethical, you're also the most creative when it comes to financing.
Oh, well, thank you. I can say the same about you and your team. I absolutely adore working with you because I know that when it comes down to it, you are always on time with documents. You're very communicative and just super easy to work with, which is amazing. And your clients are awesome. All of them have been awesome.
Oh, that's really nice. Well, I definitely want to get into, I'm sure a lot of people have a ton of questions. I'll wait till you get settled down and grab a glass of wine.
Okay, I might actually sign off really quickly and then pop back on when I'm on my laptop.
Sure. Yeah, go ahead.
Okay, I'll be there in 2 minutes.
Well, I'll start talking. So, anybody who's interested in purchasing
Okay. I am unmuted. I am in my office. I am ready to go.
It's good to see you.
Good to see you too.
Cheers.
Cheers.
Happy hour.
Happy hour.
Thank you so much for taking the time to join us today. I couldn't think of a better mortgage broker that I'd want to do this with.
Right? When Elise messaged us like, Caitlin's going to be the host, it's like, yes, I love you all equally, but I love you the most.
I left everybody bloody. We all fought for you, and I was like, it's mine. He has to be mine.
Oh, that's awesome.
So Dallas,
yes.
Times are scary.
What's that?
Times are scary.
They are scary, but it's also a massive opportunity.
So talk to us about this. This is everything I need to know. What's happening with interest rates? Are the banks even still lending? Are the banks going to have any money? What's going on in the private lending situation? Okay, so private lending is actually a really interesting situation. So I'm going to start there. There have been a lot of investors that have pulled their money from the market because it is a little bit of a panic situation. Mortgages in the B lending space, in the private lending space, is much more risky now just because economically speaking, we're at a dead halt. And so what we have seen is some of the private lenders that are still moving forward and are still lending money on a regular basis, they are withholding 6 months worth of payments up front. And that is being taken out of the mortgage proceeds in the private lending realm. Another thing that we have started to see on that front is the fact that some of the investment companies that actually hold the funds and then lend them out on behalf of the investors, they have actually started gating their funds. And so what that means is that they have made it so that investors can no longer pull out their money. Typically speaking, an investor has control over when they want money in with the investor and when they want to take it out. But what they were seeing was that there are some industries, not even necessarily just mortgage related industries, that are busier now than they were before, and they are still needing money and they're still needing cash flow. Mm-hmm. And so the regular attrition rate for pulling money out is about 5%. When it got to about 15%, the investment companies basically just said, nope, you are no longer allowed to pull your money. It is here. We are investing it. We are managing it. We are going to maintain what we are doing. We are going to maintain operations. So that's actually really good news on that front. When it comes to your prime lending space, so that would be your A lenders or like your big six banks, your broker banks, what they're also called also called monoline lenders. They are a little bit more restrictive when it comes to pushing deals through at this point, and a lot of that has to deal with employment. And so some of the things that we have seen are all lenders are now requiring full income documentation upfront. Okay. And they are not counting EI or the emergency wage benefit or anything else like that to be income. So if you are currently laid off, we are not able to use your income towards qualifying for a mortgage. The upside of that, if you could say that there is an upside, is that when this all blows over, lenders are going to be hungry for business. Why do you think that? Because they only make money when they're lending money, when it comes down to it. And so essentially, whenever you have a dip in the economy, and this is also different than any other financial crisis, so to speak, than we've had ever in the history of the economy as it stands right now. Not only have we never been more of a global economy, number one. Number two, this is medically induced artificial stop to business. Mm-hmm. And so once that starts to clear up,
you're going to start seeing people wanting to come out and buy things and do things that they haven't been able to do. You're going to see people that have had to pull back on their lending and not make the funds and not be able to pay out dividends. Those investors that invest in these companies are going to need dividends, which means lenders are going to need to lend. And depending on how everything plays out, it's really the investors at the end of the day that stipulate what kind of risk they're willing to take when it comes to lending out money. So if investor A is willing to be a little bit more lenient on one area than investor B, then investor A is going to get more of the mortgages. And so you're going to see the ability to have some exceptions done on different deals that normally wouldn't have been pushed through during a really strong economic time or during a time that's not in a recovery process.
Interesting.
Mm-hmm.
So mortgage rates then, like interest rates are dropping, but mortgage rates are going up. So the buyers are like, I think I missed the boat on getting the lowest interest rate.
That has a couple of different things. And I actually wrote a blog post on this about a week and a half ago. So I can share the link to that blog post if you're interested.
Yeah.
So what has happened is the Bank of Canada has dropped their overnight rate. Mm-hmm. Now, the prime rate is linked to the overnight rate, but it is not directly tied to it. So your overnight rate is what the banks lend money to each other for one day, so literally overnight. The lower the rate, the more they're trying to push loans out and push the economy. Prime rate is set individually by every single lending institution. Now, on average, they will all end up on an even playing field. Because if you have a higher prime rate than somebody else, you're less competitive on the variable rate mortgage scale, unless you're deepening your discounts. This might seem a little bit confusing, so I'm trying to break it down here. But prime rate is essentially the rate that you will get, or the rate that institutions will lend out their money at to their highest value customers or their most trustworthy customers, so to speak, which is why even before the benchmark rate came into effect for fixed rate mortgages, it had been in effect for variable rate mortgages previously. So variable rates right now, they're sitting at around prime minus like anywhere from +1, so that would be 2.55. And we're seeing some rates around -0.2, which would give you 2.25. Yeah. Now, typically what you would see in a regular market when your prime rate is higher, you would see discounts in the range of prime minus 0.85 to prime -1. So they have very much reduced the spread with which they are willing to give you a discount. And in some cases, they're not willing to give you a discount. So when you sign on to a variable rate mortgage, your payments will fluctuate with prime rate depending on what your discount is. And as prime rate starts to go up, if you panic and you want to lock in, you can absolutely lock in to whatever the current market rate is for your remaining terms. So sometimes once rates start going up, it's not going to make sense to lock in because the 3 or 4 year term is substantially higher than the 5-year term or your current variable term. On your fixed rates, those are attached to the bond market. I shouldn't say attached to the bond market. They move in step with the bond market. So if the bond market goes up, interest rates go up and vice versa. Now, what we ended up seeing, I would say mid-March, early to mid-March, was just a rapid decrease in interest rates. Like the floor had fallen out from underneath of us and rates were literally dropping and changing daily. And that's because people were panicking. They were pulling their money out of the bond market. As the bond market went down, the mortgage interest rates went down. Then when the government released their 300 million fiscal policy, what that essentially ended up doing is it helped to buoy the bond market a bit, but it also really, really decreased the level of liquidity in the markets. And so liquidity is your ability to move money from one place to the next. And as liquidity went down, risk went up, and therefore interest rates went up on the fixed market. They've held steady for about 2 weeks, and now we're starting to see a very, very slow inch downwards.
Okay.
So we had our first rate drop today, and it may continue to get a little bit lower, but that is yet to be seen. And if we want to look historically at 2.69 is one of our 5-year rates right now. That is still one of the lowest interest rates for a mortgage that you will ever find, because anything under 4% is considered to be artificially depressed.
So first-time home buyers, still working, decent job, decent credit, fixed or variable?
It really depends on what the long-term plans for the property are.
Hold for 7 years.
Hold for 7 years? See, that is a really tough one. So the one way I try and guide clients is by saying, if you are going to lay awake in bed at night, wondering if your mortgage payments is going to change depending on what the Bank of Canada is going to do, it doesn't matter how good the rate is for your variable rate, it's not worth not having peace of mind.
Yeah.
If you desire a large level of certainty, if you have a very tight budget, if having any kind of movement in your payments going up is going to affect you negatively, then a variable rate mortgage is not right for you. If you are planning on holding on to the property for at least 5 years, if you are, stable in a relationship. Now, this is one that's never fun to talk about, but if this is the first time you're moving in with your partner,
don't do it. Get a variable so you can back out.
It is much cheaper to break the mortgage on a variable rate mortgage than a fixed rate mortgage. And I don't want to make light of the situation.
No, but it's true.
It's true. You learn a lot about somebody in the first few years of living with them.
Oh, I know. I've had quite a few clients lately that I've helped them buy houses as relationships. They've contacted me less than a year later wanting to sell it.
Yep. Yep. Same.
Right? I think we have a mutual client in that situation.
I believe so. It's one of those things that, as much as I don't like having that conversation, it's a conversation that I always have, especially if one client out of the pair has really, really great credit and really, really good money management versus the other one that's not so good.
Yeah. Well, let me ask you this then, on the vein of relationships and stuff. First-time home buyers, they both have phenomenal credit. They both have decent amount of money. The benefits of buying the first house at 5% down with one owner to buy a second house, as investment property under one name.
So, okay. If you want to go the route of having
a lake house.
What's that?
Or to buy a lake house.
Yeah. So, to answer this as diplomatically as possible, if you are listing yourself as being married or common law or something else, it's not going to be as easy to buy subsequent properties with 5% down unless you are moving into the next property. So let's say you're a first-time home buyer, you're a young couple, good jobs, good money. You decide that you want to have a 2-bedroom, 2-bathroom condo as your starter property, and that suits you for a little while until, there's a bun in the oven or something else happens. And it's like, okay, now we're ready to upsize.
Yeah.
So once you're ready to upsize, you can buy your subsequent property with 5% down. And all we would have to do is prove that the original property is still affordable with rent coming in. And then we would have to show a lease to show that the rent is coming in. Mm-hmm. Now, if you're buying a secondary property like a lake house, that is always going to require a 10% down if we structure the deal as a second home. So it's always going to be a matter of looking at everything in a case-by-case basis and determining what makes the most sense moving forward. Now, let's say, for example, you have a young couple and the husband is on the first home and it's a single family detached, 3-bedroom. It'll suit them for a while. And then they decide to buy a second property as owner occupied. That's a 2-bedroom condo. That one's going to be a little bit harder to sell, but it's in these scenarios where your best thing to do is to actually talk to a mortgage broker, because my job is to help you set up the best financing possible. And again, it is a case-by-case basis.
Mm-hmm. So Dallas, good question. When should buyers think about talking to a mortgage broker?
6 months before you plan on buying.
Good. I mean, I think you and I can both agree that we often pull each other in at various stages of the transaction. Because a lot of people want to buy a house and they just want to go look at houses and they have no idea if they can get approved, how much they can get approved for. What are some of the much negative drawbacks of clients going to do that?
Drawback of doing that, of going to look at a house if you don't know that you can afford it, is suddenly realizing that you've fallen in love with a property that you won't qualify for based on your current situation. And so
it makes our jobs harder.
Yes, exactly. And so honestly, the best thing you can do if you are getting ready to purchase a home is sit down with a mortgage broker. And if you want to get a second opinion from your bank, by all means, get a second opinion from your bank. The advantage that a mortgage broker has over a bank is I have access to dozens of lenders, whereas the bank can only offer their package of products. And so I can literally play matchmaker and say, okay, here's the best mortgage with the best terms for your current situation. And once you have an estimate, let's say it comes back, let's say your dream house is $400,000. I run through the pre-approval process, I pull the credit, and either credit is bruised and needs some time to be rebuilt, or $400,000 just isn't feasible. At that point in time, we can actually set up a plan to get you to where you want to be, whether that be needing to save more down payment, whether that be needing to rebuild credit to a certain extent, or even if that's finding a second job and earning the money that you need to earn in order to get the affordability level there. So it's one of those things where we can actually help look at the full picture and really set you up on the path of success and actually look at the overall budget. So the truth is, we get paid a commission from the bank when we place a mortgage as a mortgage broker. And if I don't get you a mortgage, I don't get paid. So I want to get you a mortgage, but I will never do it in a fashion that sets you up for a bad financial situation. And so it's a good idea to have enough time in advance so that if something needs to be rebuilt, it can be rebuilt. If you need to make a plan B, you can make a plan B. And you're not falling in love with something and then realizing that you've just had your heart broken.
Mm-hmm. Yeah, I completely agree. So what are some of the other common questions you've been getting as a mortgage broker during this whole pandemic?
How to defer a mortgage.
Yeah, talk to me about that.
Okay, so deferring a mortgage it's going to differ from lender to lender. Two of the big things that you need to be aware of is this is not a free skip a payment program. you are going to be incurring interest during the time that your payment is deferred, and it's going to be added to the principal balance of your mortgage. Now, with the extra money being added to your mortgage, that's going to be dealt with in one of two ways. Some lenders have increased the monthly payment for the remainder of the term in order to stay on track with the remaining amortization. Other lenders have allowed you to stay with the same payment, but then that increases your total amortization, or the total time that it will take for you to pay off your loan. And so the number one question you need to ask your lender is, number one, how much interest are you going to be incurring per month that you are not paying the mortgage? Number two, how is it going to affect your upcoming payments? And number three, do they have to requalify you for your mortgage at the point of asking for the deferral? There have been some lenders that are needing to do full credit checks and full reassessments in order to okay the deferral. So if your financial status has changed significantly from the time you originally got that mortgage, you might land in a pot of hot water that you weren't expecting.
What's the worst that could happen?
If you don't requalify, honestly, I'm not entirely too sure, but I do know that if you don't requalify for your mortgage, especially like if I'm working on a transfer from one lender to another, and you can't requalify for your mortgage based on a change in circumstances, you have to stay with your current lender, because they don't requalify you if you just sign on the dotted line. So one of the questions before even going through with the application you would want to ask the person on the phone is, are you going to requalify me? Are you pulling credit? How is this working? Because if it comes down to the point where they decide that the mortgage is non-viable, they may push to recall their mortgage, which would mean you would either have to find a way to get it remortgaged with another company, or you would have to sell the property. So that hasn't happened to my knowledge, at least to any of my clients, but it is something to be aware of.
Yeah. Oof. Let's talk about something happy to end it on a good note.
Yes, let's do that.
We got about 10 more minutes. I actually am doing a property inspection today.
Ooh, fun times.
We've actually sold quite a few houses this week, our team.
That's awesome.
Right?
That is so good.
And I kind of feel like my biggest issue, and I said this last week on the call, is I think a lot of people are hesitating putting their house on the market because they're like, oh, it's a terrible time to sell, blah, 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 blah. I don't foresee it getting better in the next year for time to sell. But my biggest issue, and to all you homeowners out there, is a lack of inventory.
Yeah.
We cannot find the houses we're looking for. I'm very close to knocking on doors, and I have set all of my clients up, every single one of my buyer clients up, to be automatically alerted of any time a house remotely fits their parameters. So if anybody out there in the Facebook world wants that, contact me, caitlin.yeg.realestate, and I will set you up, because the good houses, the amazing houses, the well-priced houses are selling immediately.
Absolutely. There has been some really quick turnaround time. And again, lenders are still lending. We just need to know how to set up your file so that we can make it successful. And that's what our job is as a mortgage broker. We are here to help you be successful in purchasing a property or refinancing a property. Actually, that's something we could also talk about really quickly. For any clients out there that are in this situation and are going, holy crap, I've got a ton of equity, but I've also got a ton of bills. What do I do? You can refinance and roll consumer debt into your mortgage. And instead of paying 19% on a credit card bill, you can pay 2.74% on a refinance. And so it's something that may be worth looking at. Sure, it's amortized over a longer period of time, but by the same token, if you're compounding at 2.74 as opposed to 19.99,
that's a lot of money.
That's a lot of money.
Yeah, have people been taking advantage of that a lot lately? That's way better than deferring your mortgage payments.
Honestly, I feel like if you are able to do that and you can do that in order to avoid deferring your payment, then you are putting yourself in a much better position. I feel like at this point in time, we haven't seen a ton of refinance business sprouting out of this. And I think it might be because it's just still a little bit too early. People are still waiting to see where everything's going to fall into line. We're still waiting on government programs to be released and everything else like that. And so I imagine as time goes on, we will see a pickup in refinances.
Yeah. So what do you think is going to happen, Dallas, with the interest rates and the big banks and the lending? Like, what are you hearing? Like 6 months from now, what's this going to look like?
I'm hearing a whole lot of confusion, and honestly, your crystal ball is as good as mine.
Yeah.
Like I said, this is a never seen before anomaly in the economy, and it's not just in Canada, it's the entire world. The global economy has stalled. And so there is really no way of being able to tell exactly what's going to happen. I am an eternal optimist, and I would like to say that, yeah, I would say that you have to, like, 6 months from now, if government programs act the way that they're supposed to, and we don't end up having a large number of insolvencies, and the market is still, like, there is a good recovery on the market. I don't see interest rates plummeting. I don't see them skyrocketing because it is going to take time to rebuild. I would say we're settling in for a period of stability when it comes to interest rates, unless something else major happens, like, Mr. Man down south decides to declare nuclear war on somebody, then that'll mess everything up again. So
we'll have another video chat then.
Yeah, right?
Oh, man.
So yeah, like, honestly, at this point, everybody's just looking to recovery. Nobody knows what's going to happen. I think we're
going to happen
a little while, and then it's just going to be a matter of wait and see, just like everybody else.
Mm-hmm. Yeah. And have you been self-isolating?
I have. That was one of the bonuses of doing what I do, is my team and I have done everything electronically for about the last year and a half. And so literally all we had to do was pick up our laptops, a couple pieces of paperwork, and then we started working from home.
I'm excited to do my next deal with you.
Yeah, I'm excited too. Got to get more of those buyers. Right? Sellers are good, but buyers are better for me.
Lately, all my buyers have been cash buyers.
Oh my gosh, wouldn't that be nice?
I have cool people I hang out with.
Apparently.
I don't know what's happening. It's really fun though.
Yeah, no, that's fantastic. That is really, really good.
Yeah.
Oh, I've missed your face.
I've missed your face. I'd say let's get together, but
in like 8 weeks. 8 weeks we'll be able to sit down and do this in person. Yeah. Honestly though, I don't think it's going to be that long, because we have done a good job of flattening the curve. Like, we have as many recovered cases as active cases in Alberta. Now, that's not a reason to, run out and high five your neighbor right away, but it does mean that we're moving in the right direction.
Have you been to my house before?
No, I haven't.
Oh, okay. Well, when this is all over, we will do something similar to this, but we'll be together and we'll be on my back deck because it's west facing.
Yes.
I'm down in the flats.
Mm-hmm.
5 degrees warmer down here.
Oh my gosh. Yeah, no, I can see that. And like a pair of shorts and a nice glass of wine.
Yeah, and it's going to be plus 18 this weekend.
Oh my God.
Right now on my back deck, I just came in from there before we started this, it was plus 15.
Wow. I mean, we could technically sit 2 meters apart on your back deck. No.
Okay, well, let's end this on a very positive, upbeat note. What if you could tell anybody in Facebook land or in the digital world, if anybody's been listening to this, one like piece of mind or something positive about financing situation right now?
Peace of mind and financing situations right now is the fact that we are an essential service. Realtors and mortgage brokers are an essential service. We provide access to credit. So we're still open. We're still working for you. People are still funding mortgages. And all you have to do is call your favorite mortgage broker, i.e. me.
Dallas
Sleeman. Yeah, like call a broker. Talk about your situation. Find out if there are solutions. We can help in all sorts of ways that you wouldn't imagine because we have access to lending that your average bank is not going to have.
Mm-hmm. Yeah, you've always been so good at
that. Yeah, just a little.
But I'd say that I've never been busier. So on the listing side and the buyer side. So, and it was a great year so far. Like January 1, we've talked about this. I was like, what is happening? I'm busier in January and February than I was all last year.
Mm-hmm.
And there was like a sense of optimism.
Yes.
Right, in the world where people just got so used to the price of oil being so low that they're like, you know what, I'm going to move forward anyways.
Mm-hmm.
So I would just say, like, if you're on the fence about selling, sell or contact me for a appraisal of your house. I would love to talk to you about your options. And if it's not a good time to sell, I will tell you and I will rent it out for you.
100%. And on my end, if you have any questions about mortgage financing, even if it's one of the crazy ones, I will answer any questions. I have a ton of options, and honestly, live your life. It's now. We never get today back, so do what you need to do.
We're dreaming of.
What's that?
Buy the loft you've always wanted.
Yes, yes. But only if you can do it and not be house broke.
Oh, I love you. Okay, I'm gonna run, but thanks for joining us, and let's do this again in 2 weeks.
Yeah, let's do it.
We'll retouch base the 20 minutes with Dallas about the financial situation.
Yes, that sounds amazing. All right. Mwah. Love you.
Bye.
Bye.